Hello, YouTube coin collectors and stackers. Today we're going to be talking about the Devil's Medal. What is it? Before I get into it, please remember to like and subscribe, and thank you for doing that. So the Devil's Medal was a nickname traditionally reserved for cobalt, because German miners back in those days believed that the evil spirit kobold was hexing their ore. But in recent years, silver traders and bullion traders have given this name to silver due to its extreme volatility. We wouldn't know anything about that recently over the last 3 or 4 weeks. Throughout history, silver crashes have signaled all sorts of things, from the end of empires or massive shifts in global power to other things. And today we're going to look at some of silver's most famous crashes and see if that gives us any insights into where silver might be going in the future. What's different this time? What's the same? Where do we find the parallel? So that's what we're going to be doing today. And along the way, we're going to be looking at all sorts of lovely silver and some gold coins, just so you guys have something to look at as I'm yabbering on and on. So let's start with the Spanish Empire and the Spanish price revolution, which took place in like the 16th and 17th century. So the Spanish Empire discovered these mountains full of gold. And this was particularly in Potosi, which is modern-day Bolivia. And here is an 8 reales from 1807 from the Potosi Mint. This one's been holed, unfortunately, but it's the only Potosi one I had for this video. And, what was happening was they were pulling so much of this stuff out of the ground that they were flooding Europe with silver. And the sheer volume of this silver caused the value of it to plummet. Just like anything, when it's scarce, it's valuable. When there's a ton of it, it's a lot less valuable. Or, when it's common, common metals aren't valuable at all in some cases. And as silver was the currency at the time, it caused everything to crash. And there was hyperinflation across Europe. I love this with these chop marks on. Isn't that awesome? Amazing. This is a nice piece. Chop marks are nice on it too, because, they don't really interrupt the coin. Some of them are just all over it. So as, this silver was flooding into the market, and all sorts. I'm showing you different reales coins as we go. Here's one from 1799. Despite its vast wealth, Spain went bankrupt multiple times because the silver eventually became valueless over time. Well, not valueless, but significantly less valuable. And this shifted Spanish hegemony in Europe toward new economic centers in places like the Netherlands and England. So moving on from that time, where the Spanish essentially flooded the world market with silver, particularly the European market with silver, we're going to fast forward in time a little bit to something known as the Crime of 73. This was in 1873 in the United States. The United States Congress passed the Coinage Act, which effectively stopped the minting of silver dollars at the mint. So up to that time, if you had silver, you could take it into the mint and they would mint you silver dollars. So in 1873, this was the style of silver dollar that was being minted at the time. This seeded dollar. This one's from New Orleans, and obviously earlier on than about 13 years before this act passed. Essentially what happens is that silver's stripped of its legal tender status. Miners could no longer bring their silver from the mine to be converted unlimited into coins, particularly silver dollars. And the market price crashed against gold. It essentially took the United States off a bimetallic standard and put it on a gold standard. Part of the act also authorized things like this trade dollar, since China was on a silver standard and the United States needed to compete with the Spanish mill dollar in places like China. When this came out, this particular coin came out, San Francisco was actually exporting more Mexican silver dollars than U.S. dollars to China for trade. So they tried to fix this with the Specie Payment Resumption Act in 1875, which reset silver's legal tender limit to $5, and that just caused the price of silver to crash even further. Enter the Bland-Allison Act. The Bland-Allison Act of 1878 essentially required, and I've always loved this because one of the guys behind this was Senator Silver Dick Bland. Always makes me laugh because I'm a middle schooler at heart. So the Bland-Allison Act required the federal government to purchase $2 to $4 million a month in silver and turn it into silver dollars, which in this case became Morgan dollars, Later, this became the Sherman Silver Purchase Act, which increased that limit to $4.5 million a month. And most of these, as we know, ended up sitting in vaults for decades and decades, only to be that's a clean-a-roo right there, isn't it, guys? Yep, clean coin. Let's take a look. Quick lesson on clean coins. Clean coin on the left, not clean coin on the right. So let's take a look at the not clean coin. So the Sherman Silver Act increased that, and as we know, GSA released all kinds of millions of Morgan silver dollars in the 70s and 80s as a result. Because people didn't really like carrying around these big, heavy silver dollars. They much preferred smaller subsidiary coinage and things like silver certificates, such as like this Black Eagle certificate. This was much easier for them to carry around in, say, a wallet or a purse than a whole pile of silver dollars. But what was the result of all of this silver piling up? Well, the result of the Coinage Act, or the Crime of 73 as it's called, was a period of massive, massive deflation. And that deflation essentially crushed farmers and debtors who owed silver-denominated debts but now had to repay them in gold. And this sparked a populist movement, this gold movement. There's a very famous speech called The Cross of Gold by William Jennings Bryan, who unsuccessfully had a presidential bid at the time. And he said, let's look at some gold because we're going on to the gold standard, which is essentially what the Crime of 73 does. And he says, "You shall not pass upon the brow of labor this crowd of thorns. You shall not crucify mankind upon a cross of gold." So there was much backlash against this gold standard that was being proposed. Let's fast forward again in time to 1980 and something called Silver Thursday. As we know, in the late 1970s, some billionaire brothers, Nelson and William Hunt, attempted to corner the market of silver. They essentially bought up roughly 1/3 of the world's private silver supply. Well, this got attention from some folks at the CME, or the Chicago Mercantile Exchange, COMEX, who essentially instituted new rules. Let's look at something from the 80s. It's kind of related to the time we're talking about here. So after prices peaked at nearly $50 an ounce in January 1980, the exchange increased margin requirements, meaning you had to put more money down as a deposit if you're going to borrow money to buy silver. And a lot of what the Hunt brothers were doing, borrowing money to buy silver. So they were extremely leveraged. This deleveraging caused prices to plummet to $11 an ounce in just 2 months. So Silver Thursday, which was March 27th, 1980, nearly collapsed several brokerage firms, and the Hunt brothers eventually went bankrupt, although they did get their fortune back over time. And the crash kept these silver prices down for nearly 2 decades. So let's go ahead and go in time to 2011 and 2012, although we'll go back in time with the coins we're looking at. Another beauty on the chart mark front from 1781. Nice looking original coin. So in 2011 and 2012, we had this paper panic. So as silver approached its legendary $50 peak yet again, driven mainly by post-financial 2008 like crisis fears and the rise of ETFs and inflationary fears, we had a sudden crash that occurred in May of 2011. And silver plummeted 35% in just a couple of weeks. Selling continued through 2012 and finally subsided when the Eurozone crisis stabilized later that year. What caused this to happen? This is a real beauty right here. You guys have seen, if you watch my videos, you guys have seen this before. But this is, I love this coin. So what caused this was, again, COMEX stepped in and they said, okay, we're going to raise margin requirements. Except this time they did it 5 times in just 2 weeks. And we've seen something similar happen recently where they've been doing that. This forced traders who had borrowed money, again, they had taken out leveraged positions to buy all this silver, and then they had to sell it to cover their loans because essentially they were being called. Their margins were being called. So the result was that you had this decade-long bear market in silver, eventually bottoming out near $12 an ounce in 2020. And it essentially broke the spirit of a whole generation of silver investors. And today, if we fast forward to today, we're currently in the middle of this massive reset, this leverage reset, after silver hit an all-time high of 121.65 in late January, just a few weeks ago. We had this massive, violent correction on that Friday, which I think we'll all remember that Friday, when silver plummeted nearly 37%. And it's come. Well, I think it was 28% that day. Eventually went down 37%, and it's bounced back a bit. There was a point in time in Asia where it actually got as low as 65% overnight in the Asian markets. And I think it's about around $85 today as I'm filming this, so we've gotten some of it back. But unlike 1980, which was fueled by speculation, and unlike 2011, which was fueled by inflationary fears and other factors, today, what we're dealing with is a physical supply deficit. So it's a bit different. There was, plenty of silver back in 1980. There was plenty of silver in 2011. There was way too much silver during the Spanish colonial times, right? It caused a different kind of problem. But today there's a physical supply deficit, specifically for silver carbon anodes for new EV batteries. And we hear a lot about solar tech. And solar tech has certainly been in the news lately is consuming a lot of silver, and it was forecast that silver for solar panels would essentially chew up 30% of above ground supply by, I think, 2029 or 2030. But the silver pricing volatility that's been happening of late is forcing solar panel manufacturers to essentially move away from putting silver in the solar panels at all. Now, silver accounts for up to 29% of the cost of a solar panel, and margins on solar panels are wafer thin. Very, very, very thin. So LONGi Green Energy and Jinko Solar are switching away. They have plans to switch away by Q2 2026, while Shanghai Eiko Solar is currently producing all of its solar cells with zero silver. So high efficiency cells will still require some solar, but the majors are all moving away from solar in their solar. They're all moving away from silver in their solar panels, and that should be a wake-up call for people that are betting on that particular industry. Now, could it get gobbled up by other things like Samsung batteries for electric cars? Sure, there's a lot of industrial demand for silver still, but the solar demand is going to be falling, and probably very precipitously starting in the second quarter based on my research. Do your own research, and this is not financial advice. Why did we have that flash crash a couple weeks ago? A gentleman named Warsh, President Trump nominated him to essentially replace Jerome Powell, and he's hawkish, and he wants a strong dollar and all of these things, and this caused this sort of flash crash to happen, and there was a sort of sell everything moment for the institutions. So what essentially we had is a peak in 1980 driven by speculation. We had a peak driven in 2011 by a debt crisis. And then today we had a peak driven, I would argue, by speculation, although not entirely outlandish because of all the demand in industry for this stuff. But I think there was a bit of speculation that drove it up to 121. I'm not saying it won't get back there. Who knows? If I knew the future, I'd be a lot richer than I am, and I'm not very rich. So I don't know the future. I'm just trying to look at the past and trying to understand the future. So the question is history repeating itself today? Well, the 2026 crash mirrors the mechanics of 2011. Margin hikes and forced liquidation. That's sort of the CME playbook there. But it has the scale of the 1980 move, which was much more massive in such a short period of time. Again, as I mentioned before, in 1980 and 2011, the world had plenty of silver. In 2026, industrial demand for green tech is outstripping what's above ground. Again, though, I mentioned that the major silver companies are all moving away from silver as something they're putting in their solar panels. The other thing I think that's really worth understanding is what is happening with mining. So most of the silver that we have, it doesn't come out of silver mines. Yes, there's silver mines, but a lot of the silver that we have is a byproduct of mining other things like copper, lead, and gold. So when we look at mining, there's something called an all-in sustaining cost. What this means is how much does it cost a mining company to extract, refine this metal, also including corporate overhead, capital expenditures, exploration of new mines and opportunities. And based upon my research in 2024 and 2025, taken from financial reports from major mining companies, the all-in sustaining cost to get silver out of the ground is around $19 to $22 an ounce. So if we look at that versus $85 today or $121, we start to go, okay, well, that's going to obviously drive these mining companies to want to get more of the silver out of the ground. But can they? Well, let's look at some of the major mining companies. We have Pan American Silver. Their all-in sustaining cost for 2025 was estimated to be $18.25. For First Majestic Silver, $21.53 to get an ounce of silver out of the ground. Barrick Gold, and this is why we're looking at gold here, Barrick Gold just gets silver as a byproduct of mining for gold. And its cost is typically calculated by subtracting silver revenue from the gold mining cost, and they just call this byproduct credits. But essentially, the way they look at it is, hey guys, we're kind of getting the silver for free. Newmont, which is the world's largest gold mining company, uses something called the gold equivalent ounce, or GEO. But after they break it all down, their all-in sustaining cost is the lowest of all to get silver out of the ground due to their high volume of $12 to $15 an ounce. Where Freeport McMoran gets silver as a result of mining copper, and they essentially say we have a net zero cost for production because it's just a byproduct of copper. It's basically free. And the melting and refining cost is usually about 50 cents to $2 an ounce. So a lot of information in there as we look at the past. Spanish, way too much silver flooding the market causes it to crash, causes hyperinflation. Then we have demonetization with the crime of 73. We have the Hunt brothers. We have the run-up and crash in 2011, 2012. We have the current one. This doesn't necessarily give us, the ability to see into the future, but it's always interesting to study the past so that we can get some idea of what might be happening in the future. I don't know what's happening. I do study this a lot, and I wanted to share some of my research with you. And, if you guys have found other things or things that I missed or things that I just got wrong or was off base, please share them in the comments below. This is a great community, and a lot of you guys are great about sharing things and correcting me if I have facts wrong and those types of things. I do my best to do my research, but nobody's perfect. We're going to go out looking at this wonderful 8 reales with these beautiful chop marks from all over the world. And I love these because, in closing, these are the coins that can tell stories. You can actually research these chop marks and see, not everywhere, but a lot of places this coin traveled during its time is essentially the world reserve currency and the currency that was traded most often with Asia. Thank you guys for watching, and happy collecting.